Welcome back to the Affinity Insurance Podcast. My name is Savannah Abney, and today we are talking to Nicole Dean and Alyssa Wilcox once again about all things insurance. Today, we're really focusing on life insurance. And if you are in that late 20s, early 30s kind of bracket in particular, and you don't think that you need life insurance, but you don't have kids yet, and you're wondering if it's really valuable, we're going to break all that down for you today, help you understand the right kind of life insurance for you, how to save on it, and make sure you're covered for the future. So, Nicole, I'm going to throw the first question to you. How do I figure out how much life insurance I actually need without overpaying for it?
Well, there's a number of different factors that you want to look at, like your debt to income ratio, like what your bills are, like if you're accounting for things like funeral expenses, if you have children and you're trying to save for college, all of that stuff is a factor as well too. It's really important to work with a broker so they can help you evaluate that and then kind of shop around to make sure that you are getting the best rate for the best amount of coverage that fits your needs without overpaying.
This was one of the most confusing things I think for people, and it was for me at a time too. Alyssa, can you explain the difference between term and whole life insurance? I think it's one of the most common questions we get around this.
So term insurance is a policy that is in place for a specific term. Typically, working adults would have a term life insurance that would cover lost income through, retirement age. So through 65 or 70, whatever that may be. It's typically less expensive than whole life. And because it's really only there to replace lost income if you were to die unexpectedly or at a young age. Whole life, on the other hand, is more of an investment policy. So it is something that gains value as you pay premiums into it. So it's an alternative to your traditional 401ks or IRAs for investing for future. Those are whole life, so they are in place for the whole term of your life. And, if you are to die before, the age of 65 or whenever, it will pay out the full face value. But at the same time, you can also use those funds and take them out for a major purchase. Say you want to get a down payment on your home. Those funds are available for you to use in that case.
Do you think largely whole is more valuable for most people, or does it really depend on your situation and kind of what you're dealing with?
I think it does depend on your situation. If your biggest concern is like, if I die, my spouse won't be able to cover the mortgage, then term life insurance is good for you. Of course, it's more affordable. When you get into whole life insurance, it's a lot more expensive, but it is a way to invest post-tax dollars for retirement. So you've already paid taxes on them. It's not something that would have to get dinged again. But I think in the long run, if whole life is something that you are interested in, I recommend talking to a financial advisor, because ultimately those folks have a lot more of the tools than we do as insurance professionals. Like, we're here to mitigate risk. And so financial professional would be better suited to help you through that.
Nicole, if I'm just an average person in my 30s, fairly healthy, no major issues, that kind of a thing, like very average, what kind of cost am I looking at typically on a monthly basis for life insurance?
It really varies. Like Alyssa says, it kind of depends on the amount of coverage that you want. If you're a single person in your 30s, you probably don't need as much coverage as someone that's married and has children and things like that. So it can be anywhere from like $30 to $100 a month for the term life insurance. Whole life insurance is a completely different. There's a lot more underwriting that goes involved in it. And like Alyssa said, because it is more an investment, it is going to be considerably more expensive than like a term policy.
So Alyssa, what if I am married? So I do have somebody else depending on me, I'm depending on them, etc. But we don't have kids yet. What is typically your recommendation around insurance for somebody in that kind of situation?
There is, formulas available to estimate the calculated needs for you if you were to pass, and it's the DIME formula. So we love a good acronym, right? So debt, looking at credit cards, car loans, other things that, are just the debt we carry that is part of living in this modern world. Income. So, of course, if you are not alive and earning income, your spouse is going to need to have some additional support to replace that income. So, a common rule of thumb is 10 to 12 times your annual salary. And then you add in the outstanding balance of your mortgage and then education. So, you may not have kids now, but if you are planning on having children, looking forward to the cost for education, because that is one of the biggest expenses as children age and as we age, college is very expensive. So you want to factor that in as well.
Nicole, can I change coverage later if income or family situation changes? Like I'm married now, no kids, but in like a few years I have kids. Can I shift my life insurance policy to accommodate for that, like increase the amount or whatever the situation may be?
Yeah, absolutely. And that's something that you absolutely should do. Like if your income changes, if your debt changes, if your needs change, if you have children, or you decide to purchase a home and you're concerned about leaving your spouse with that excess debt, if something did unfortunately happen to you, it absolutely should be evaluated on a regular basis if any of those things change.
Is getting life insurance as complicated as people make it out to be? People kind of will talk about like, you got to do this, you got to jump through a lot of hoops, you got to get, like a health exam done, like all these different things. Like, how complicated is it in reality?
Every carrier is different, and of course, every life insurance policy is different. So I recently went through the process of getting a new policy, and it took a while. It wasn't super complicated, but it just kind of dragged out. There's the application that you need to complete. Typically, it will start with an illustration, which is like, I'm a healthy 45-year-old woman with non-smoker. And then, they want to verify that you actually are what you say you are, because they're covering your health in a way. So, you will have to provide access to your medical records, things of that nature. And so there are areas where the application process could drag on. They might need more information. You do need to complete a medical exam. I find that those are actually really easy. They send somebody to your home. It takes 10 minutes at most. And usually they're very lovely. And, you just have to provide, in some cases, a urine sample. They'll take your weight, whatever it may be. And so there are ways to kind of just make it simpler. Of course, prepare in advance, have everything you will need, your doctor's information, medical information, so you can sign the appropriate releases. I think it's super important to be honest and forthcoming, because they're going to pull your records. And if you weren't truthful, they're going to find out. And if it slips through, they could deny a claim. If you say, I'm not a smoker, and then you die of lung complications, they'll be like, well, you lied. That's where, again, working with a broker to help guide you through the process and kind of handle some of the back and forth helps as well.
Thank y'all so much for your insights. Hopefully this was helpful for you. If you don't have life insurance, this is your sign that it's time to get some. No matter where you're at in life, it can be a protector for you, your future, and your family. Stay tuned for our next episode next month of the Affinity Insurance Podcast, and we'll see you then.